Going to see how to trade, how to make money from the markets, and let's lock in. Yeah. So listen up. I already did one of these before, but my computer started bugging. So it still is a little bit actually, but we're going to keep on going. So the daily time frame here on NQ is bullish. Okay. It's pretty straightforward. You can see that we're heading higher, right? Daily structure is bullish. So we're anticipating a break of structure and a continuation to the upside, right? So now that we've established that the daily time frame is bullish, we look at the next time frame, which is the 4-hour. Because if we have time frame alignment from the higher time frames and project that to lower time frames, we're very likely to catch the higher time frame expansionary move. So 4-hour is bullish. Boom. 4-hour never broke structure to the downside, so we are good to go. Now we scale down further into market open, which is here. We are in a retracement and we want to see an expansion, right? So what does that mean? We need hourly to flip bullish. But we know that market opens at 9:30 and the candle won't close until 10 o'clock. So how can we expect an hourly bullish close in advance, right? Well, when I did trade, I did know that it was already bullish, but how I was going to trade was this. 15-minute candles need to be bullish, because if the 15-minute is bullish, the hourly will likely play out bullish. So what can we tell here? 15-minute break structure at 9:45. This is where we're allowed to trade. Before that, we would not be. And guess what's also followed by it? A 15-minute liquidity sweep. So not only do we get market open, break of structure, liquidity sweep, but we also get a 15-minute break of structure. I just said the same thing. Disregard that. But now that we've said that, now we're going to scale down to the 5-minute, because we've just said that the hourly is good to go because the 15-minute broke structure. So we have 15-minute, 1 hour, 4-hour, and daily who are all good to go. We've swept liquidity here because of that 15-minute candle that we just talked about. So at this point, we have to check if the 5 minutes ready to go, and then the 1 minute's good to go. So what's going on here? 5-minute is bullish. 5-minute never breaks structure to the downside. So what does that mean? Scale down to the 1 minute and find an entry. That's it. Literally it. So when do we go bullish? We go bullish. Bruh, this is the second time that this is happening. But we go bullish at 9:45. This is where we can enter. So now we look for entries. We get a mitigation of this inverse fair value gap. So we get a mitigation of this inverse fair value gap after the 9:45 bullish close. So now we're just looking for a break of structure to the upside. Boom, we get it. This is where I wanted to enter. But I didn't get the opportunity because I was on the phone with someone. So what happens is I wait for a retrace, at which point we get the furthest fair value gap we can from this expansionary move. We get it mitigated, and I see a reaction, at which point I'm pretty much good to go. And I put my stops under the lows, and we let it play out. And we're now running about 2.5, 3 hour in profit, which we're going to close out. Technically, we already did, but still, good day. Good to be back. It's like the second trade I've took in the past few weeks. I haven't been trading that often because, well, I haven't been seeing much. And I'll see you guys in the next one.